All right, Yield Nerds, episode 173. I wanted to focus on two things. Both of them are questions from listeners. One talked about concentration risk and how filters are being used, and I'm going to tell you how I'm getting NASDAQ returns while avoiding concentration risk. And then a focus on EMMA with municipal bonds. Up to 481 subscribers. Thank you for your support. We have several playlists. This one will go on the Muni list as well as the income investing roadmap. Most importantly, please remember I don't have magical powers of prediction, so make sure you do your own homework. Well, four parts today. One, we'll talk about market temperature, which it has been sizzling hot this Friday, more like burning down the house. And we'll talk about EMMA and municipal bonds, and one of the listener questions, how to set up stock filters. And I'll tell you where my holdings are. My equity portfolio itself is doing reasonably well, 9.3% return, but I make no bones about it. I can't hold a candle to the NASDAQ, which roared at 21% for the last 3 months. And the part that I will tell you, though, is the NASDAQ is very concentrated. The top 8 stocks are 40% of the NASDAQ index. So, you're really betting on those 8 stocks. And I don't know if I want to put all my eggs on 8 stocks. That's just me. You do you. My portfolio per se has about 3.75% in equities. The rest I kind of chill out. As you can see, I'm very thoughtfully in municipal bonds with sewers and schools and roads and so on. That's where I put my money. But with respect to equities, you may remember I told you I have a small tweak. I buy on the first day, and if the stock is going down, I stop, and then I wait until the stock goes up again above the previous buy, and that is when I buy again. This way, when a stock is on a constant upward trajectory, I get the gains. But if it suddenly goes down, I stop. And that is the tweak I reviewed in the previous episode in greater detail. Feel free to take a look at that episode again. And the question is, how did it do? Well, it turns out I have been able to diversify. I have something like 80 odd stocks, not 8 stocks. And my returns match the NASDAQ in the last couple of weeks. And I'm hoping they will exceed them soon. We'll see. So I'm pretty happy about it. Now let me talk to you about EMMA and the municipal bonds. So what is EMMA? Before I go any further, I want you to know I'm not a wealth management advisor, and this is not investment advice or tax advice for that matter. EMMA is from the MSRB. MSRB is an association that is around municipalities, and they control the securities issued by municipalities, aka the muni bonds. And EMMA is a free resource. So you can Google EMMA. I'll post a link to EMMA on this YouTube episode so you can pick it up from there. You create an account, and once you create an account, you can then put alerts and say, hey, tell me when there is a new document. Now, you could do some of this in Schwab. You could find out there is a new security being issued, but the EMMA alerts are far more detailed. EMMA actually shows up within Schwab as well. If you use Fidelity or one of the other brokerages, maybe you see the content there. But sometimes you do not see something on Schwab if it is a new issue and you have to go look in EMMA and you are able to read it. And that is what happened to me. Here is a Utah Municipal Power System bond called UAMPS. And Schwab showed the bond, but it had no additional information. But I was able to go to EMMA and read all kinds of good stuff about it. And I could see what the underlying rating was. And it even shows you who the issuer is and who the obligor is. The obligor is the one holding the bag, so to speak. The issuer is the one, like for example, the state of Utah may be the issuer, but the obligor might be a trust that has been created. So you need to understand the differences there. So in this scenario, even though Schwab showed nothing, EMMA was able to indeed show who is behind this bond, what area is covered, and most importantly, you can go to recent disclosures, which is sometimes in Schwab, sometimes not. And when I read one of those, I picked out something amazing. Since 2020, it turns out that this particular bond, they've been building more capacity. The debt service stays at 624 million, but as you can see, the operating revenues have just gone through the roof because more and more utilities have come online, more and more power consuming businesses have come online. And so, yay, go Utah. But this particular bond now has a debt service coverage ratio of 11, which is astounding. So I did pick up that bond. I was only able to do that after researching Emma. You do you. But I do want to point out what this issuer and obligor is and how to really look at it. You get that data, turns out, from Moody's. And you can kind of weave a web here and learn more and more and more. Then you can create a Moody's account, and Moody's will tell you what's going on for the issuer versus the obligor. And this is a Beth Israel Deaconess bond, Leahy Health. And you can see that there is a new rating action. You could indeed see some of the rating actions on Schwab as well. However, it is time delayed. But if you came to Emma, you can see it real time. So my message to you is if you have more than a couple of muni bonds, you may want to get familiar with Emma first and then possibly Moody. Well, let me answer the question that was asked by one of the listeners, which is, hey, you talk about all of these filters, how do you set them up? Speaking of filters, these are the two filters I run every day. I look for companies that have very good revenue growth, but low debt. And then I look for companies whose stock is rising slower than their revenue. And that's it. I start there and I start accumulating them. So here is how you create a filter on Schwab. You'd have to look up Vanguard or Fidelity or any of the others by yourself. You would go to research on the top menu and then stocks. And within stocks, you would click stock screener. And once you're at stock screener, you would click create my own. You can see I have a handful of screeners here. Once you're in create your own, you would start grabbing the criteria from the left. So if you said universe, you can say I want domestic, and you go back and construct each and every one of these filter criteria from the left side, and that is how you create the filters. Hope that was easy for you. But now let me go into a bigger thing. If you created the filters, you may only get 5 or 6 qualifying in one area and a handful in the other. So you kind of need to avoid concentration. How do you do that? And this is where I follow my true algorithm, for at least for the last couple of weeks, which have given really good results. The idea being when the stock is trading below your last buy, I don't buy. When it goes above your last buy, then I buy. If the stock is on a continuous upward trajectory, I buy a small tranche every day. But if the stock reverses direction, I stop. So the combination of using my filters and using this methodology is what is giving me reasonably good returns. And while I'm pumping iron buying municipal bonds, I'm feeling really good because my holdings have done very well given the market volatility. You can see that, I'm going all the way from 77% to 15% in this first page, and then goes from 15 to 7 in the next page, and 6 to 1 in the other. So as long as I'm accumulating in the right direction, it looks like this strategy indeed is working. Then the question is, when do you sell? I again use the filters. When the stock falls out of the filter, either its stock price is growing faster than revenue, or one of the other criteria, their estimated revenue growth rate is down. And so when one of those two happen, the stock falls out of the filter and I sell. So in that scenario, that is exactly what I did. In some cases, I sold at a loss. Northern Bank, XLXs, I got walloped there, and CPRX. But outside of that, my algorithm has worked well. And I will see you in a week. We'll get this tariff stuff resolved by then, and who knows what we will see. Thank you for watching Yield Nerd.